Hey, good morning, everybody. Welcome to Monday, April 15th. It is tax D-Day today, so hopefully you've got your taxes filed. If not, hey, get them finished today or file that extension. So just kind of a heads up there. Hey, just Dave will be with us just a moment. Hang tight.
Good morning. It's 8:37. Time to check in on your money and see how Wall Street's doing this morning. It is tax day, and we always try to generate more tax liability for you by helping you make money on Wall Street. Downtown Sebring, we're going to go to the offices of Statler Financial Services, where a tax day exhausted Phillip Statler is standing by. Phillip, good morning.
Good morning, Dave. Hey, got a little rest yesterday, so today I'll be putting the fires out day, and hopefully it'll wind up nice and quiet. That's the way I like the 15th to be.
I got you there. I'm my usual remiss self. Guess who's finally doing his taxes this morning?
I hope you don't get hit by a truck or anything in the meantime.
No, I hope not. Well, at the same time, I generally have a little coming back, so it won't cost me anything if I do screw up. But even so, it's almost like that American custom. Do your taxes at the last minute, even if you got a little money coming back, and I feel dumber than spit every time I do it, but I'm just as bad as the next guy on that. Let's see here. We're starting earnings season, and we got a few poster children out. The financials are coming through, and we're starting to kind of make a picture here. Wells Fargo did better with less, and at the end of the week last week, that wasn't half bad. Now we got Citibank and Goldman Sachs. Both of them come in with lower revenue and better earnings per share, and Wall Street ain't impressed, are they?
Well, it's kind of a split decision there, Dave, because when we look at the Citigroup, right, you're right. They beat on EPS, earnings per share. They missed on revenue, but they're actually trading up this morning, about 1%. Yep, so they're trading up. Goldman is the one that's not feeling the love this morning. And they came in at $5.71 a share. They're only expected to come in at $4.89. So that's a pretty good sized beat there.
However, that's a monster beat. I'm surprised they aren't trading up then.
Well, here's the deal. I think people are probably looking back at a year ago, and their revenue is down 21%.
Ooh.
So that's
Citibank's revenue wasn't down by that much, but it was off.
Yeah, it was off, and now they're comparing quarter to quarter, like this quarter this year compared to same quarter last year, and revenue's off significantly. They did raise their dividend by about 5 cents a share, so that was good. But they're just, people are a little cautious here. They're down about 1.85%.
That's kind of it. Like I said, it's starting to almost just way too early to say we're getting a picture painted. But at least with the big banks, we're hearing revenue misses and making more money off of less revenue. That's kind of an interesting picture that we're starting to at least see a line drawing of, right?
Yeah, it is. And we had another bank come in, M&T Bank, which is another regional type bank. They beat by 9 cents a share. I don't really have what they're trading at right now, but I don't have revenue numbers. The only thing I've got hit my sheet right now is just their earnings per share number.
We'll have to flesh that out tomorrow. It'll be interesting to see how their revenue did for a regional bank. The macro stuff, we're talking banking. Might as well talk about this for a second. President Trump was busy with his cell phone this morning again, slamming the Federal Reserve. He said the Dow would be $5,000 to $10,000 higher if the Federal Reserve had done their job. Gosh, I didn't know their job was to pump up Wall Street. Did you?
Yeah, I didn't either. I didn't think that was in their job description anywhere at all, actually.
It struck me as, okay, fine. We're almost getting used to the president putting out inflammatory tweets first thing in the morning. We could almost do the President Trump gossip line of the day, couldn't we?
Yeah, a lot of times you can. Hey, I did want to go back and look at last week just for a minute, Dave.
Yeah.
If we look at the numbers last week, the Dow actually ended up in the red just a tinge.
Really?
Yep, 0.05%. Everything else was up. The NASDAQ and the Dow were both up a little over 0.5%. And I do want to say on Friday, Walt Disney got a pretty big jump. They were up 11.5% on Friday. So a pretty good day for them.
What did they do? I didn't see
I don't know. I don't know what they did other than their Disney streaming service. is getting ready to come out, and they were talking about that a lot Thursday and Friday.
Well, I know that there's been a little bit of wailing and gnashing of teeth in the other streaming services, because when Disney starts theirs, they pull the rights to all those Disney classics back in-house. So if you want to watch the original Dumbo, you're pretty well stuck with the Disney streaming service. So I would imagine that probably is going to have a bit of an impact, isn't it?
Yeah, I think so. That's going to have an impact on the other, streaming services too, as we look at that.
Yeah, it's an interesting thought. I was going to say, I know that the current incarnation of Dumbo was a disappointment in the theaters, so it certainly wasn't their current box office that's driving their stock up.
No, and I think it's the expectation of the streaming service.
And everybody gets excited about new technology that may not be a moneymaker right off the bat, but we're all expecting it to become the world beater, right?
Absolutely, you're so right.
Understood. I know you've got some other reports that are out from stocks that are reporting as we get into the meat of earnings season. Any kind of a picture you're drawing so far?
Now it's a little early, Dave, to really kind of tell. But to me, there's a lot of weight in this first earnings season of the year because the fourth quarter last year was such a kind of a downer year or downer quarter. So it's going to be interesting to see how this quarter turns around. I think it's going to say a lot about what the economy is really doing. And the other thing you look at is, just because a company beats what the expectation is, doesn't mean that it's doing better than what it was doing last year. And like Goldman Sachs, that's a good example, right? They beat earnings expectation. They missed on revenue, but if you compare year over year, their revenue was down significantly from where it was a year ago.
Did you happen to see what the earnings per share was? Their earning better than last year?
I didn't see that in the report.
I was kind of curious on that, because really the picture we've been getting from everything, macroeconomics, from the stock market reporting companies that we've gotten so far, kind of confirms the same thing you and I have been talking about. We're not in bad shape by any measure, just not growing as fast as we want to.
Exactly. And in that, and so that makes what the Fed does more important. It makes what the numbers say more important, because as we slow down, we don't want to see it come to a screeching halt. So, that's why the numbers and the little dots we put on the graph are so important.
Yeah, during the old days of the Federal Reserve, they used to use the phrase soft landing, and recognizing the fact that, number one, we're due for another correction. Number two, the business cycle hasn't been repealed, and there is going to be a recession sometime. That's about the one prediction we can say that's a slam dunk. Just don't know whether it's this year, next year, or the year after. Soft landings are always nice, and a slow down to a plateau would beat the crud out of a retrenchment.
But absolutely, that's so true. We don't want to see it go backwards, and a slowdown to a lot of people feels like we're going backwards, even though we're not.
And some of that is a little bit out of the tweets coming out of the administration. Again, going back to something I was poking fun at, we've been promised so doggone much, and well, hey, would we really complain about a couple of years of 2.5% growth after a year or so of 4% growth? Probably not, but we kind of got conditioned to expect more.
That's true. It all becomes relevant and expectations, and we expect to keep doing the same thing over and over again. And we just know, if you look at history, that doesn't happen, that there are ups and downs in the economy. And at some point, you've got to head into not just slower growth, but the business cycle dictates that there will be a retrenchment and a slowdown in our economy.
Yeah, it's just part of that old physical law. What goes up must come down. Oh, I got one additional bit of macro information that came out this morning. And it's one of those indexes. I don't know what the Sam Hill, the index, exactly means, but I know what a change means, and it's good news on this. The Empire State Manufacturing Index. A month ago, we were going into mourning for a minute because it fell all the way down to 3.7, which was precipitous. The April Empire State Index rebounds back up to 10.1, which kind of gives us the idea that we had a couple of weird months in there, but kind of reinforces the notion that growth is continuing. We don't know the speed, but that at the very least is good, New York being as important a state as it is.
Well, it is, and like I said, it's one of those manufacturing indexes. So it just measures some output of manufacturing. Which, if manufacturing increases, that's to me, it got to be a good sign.
Yeah, that's kind of where I'm at. I don't know how they calculate the index, and I don't know what 10 means compared to 3, but up is good by any measure when you're measuring manufacturing, right?
Yeah, absolutely, sure is.
So, setting the phrase for this morning, as you mentioned, Philip, we had an off week for the Dow last week. The rest of them up by a bit. Friday was just an undisputably good day. The Dow was up 269 points, Nasdaq up by 37, and the Standard and Poor's was up by a little more than 19, which is why I kind of did a double take when you said the Dow was actually off for the week, as Friday was party time. 45 minutes before we throw real money around this morning. What are the indications looking so far?
Well, we've kind of made a flop from green to red this morning after the couple earnings reports have come out. The Dow is not much, but it's down 10 points. The S&P 500 is down about 3/4 of a point, and the Nasdaq's down 2.5. And gold and silver are both trading down. Silver's down to $14.84 an ounce, and gold is down to $1,287 an ounce. So. And then that favorite thing we like to talk about, crude oil, is heading back down. We like to see that. And that, I think, is on the inventory numbers that came out last week. It's down about 0.6% to $63.29.
I'll party when I see that go down 3 or 4 days in a row. Fair enough?
Fair enough, man. Sounds good. I'm waiting for the gas pump to drop a little bit more, too.
I got you there. Mixed bag across the ponds. Asia was mixed, so is Europe this morning so far. Philip, if I want to rearrange my retirement and maybe today talk to somebody who knows what they're talking about tax strategy for 2019, that also counts in your investments. How would I get a hold of you on the phone?
Dave, then give us a call at 382-0037. Follow us online at statlerfinancial.com, and then join us by liking our Facebook page at Statler Financial Services. We post a lot of good stuff there. And then join us every weekend for the Statler Financial Radio Show, noon on Saturday, 10 a.m. Sunday morning on your sister station, News Talk 730.
All righty, and online too at newstalk730am.com. Philip, thank you so much. We appreciate it, and I'll catch you tomorrow, all right?
All right, sounds good, Dave. Thanks, buddy. Hey, we want to thank you for joining us today. And hey, it's a thank you. We want to offer a free report today. It's tax time. It's tax day. It's tax week. So we got a free report on different tax strategies as you head into retirement, specifically for those type of things. So to get your complimentary report, all you have to do is text the word tax to 863-285-3815. That's right. Just text the word tax to 863-285-3815 to get your free report on some different tax strategies. Hey, again, I want to thank you for joining us. We look forward to seeing you again tomorrow.